Hey everyone, Snap reported excellent quarterly financial results that sent the stock price soaring as much as over 30% following the announcement. Of course, Snap has been on my list of top stocks to buy in 2024. It's been on my list all year long. So before you go congratulating me on making a good recommendation, I'll remind you that even after this 28% increase, Snap is still one of my worst performing recommendations in 2024. This just makes it less worse. So let's take a look at the latest quarterly results, and then I'll update my recommendation of Snap stock. Am I keeping it on my list of top stocks to buy, or am I removing it or changing that recommendation? So let's take a look at the numbers.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, like I mentioned, the stock price is up 28% in the aftermarket hours following the earnings release. But if you look at the year-to-date results in 2024, the stock is still down 32.66%. So it's still one of my worst performing stocks all year, even with this stock price jump following these earnings results. So this has not been a good pick. Even though I've reiterated this recommendation several times, I've liked Snap's business. I like the user-generated business model. That's why Snap and Meta platforms are both on my list of top stocks to buy, and Alphabet, because of that business model that is lucrative at scale. And so I suspect Snap will have excellent prospects. It's just had a little bit of difficulty in one key area, which I'll talk about. And I think it's solving that one key issue. So let's look at the results, right? So revenue came in at 1.2 billion in the first quarter 2024 compared to 989 million, which was an increase of 21%. That follows lackluster growth for Snap for several quarters. So that was good that it returned to solid revenue growth. Average revenue per user jumped to $2.83, up from $2.58. That was good news as well. However, it wasn't all good news for Snap. And one of the areas of headwind was operating cash flow, which fell to 88 million compared to 151 million in the same quarter the prior year. Free cash flow came in at 38 million compared to 103 million in the same quarter the prior year. So while overall the company had an excellent quarter, it wasn't all good. And these were two areas where it went backwards in operating cash flow and free cash flow. So here's an area of major importance that I don't think investors will be paying that much attention to when they evaluate Snap's earnings results. And that is that it launched a new and improved version of Conversions API available to all advertisers that offers easier setup with reduced integration times. And they partnered with Snowflake to enable advertisers to easily implement their CAPI solutions without needing to build a bespoke back-end integration. Their improvements to CAPI and improved collaboration with advertisers has resulted in CAPI integrations growing approximately 300% year over year in Q1 2024. Now, if you've been following my videos on Snap stock for the last 3, 4, 5 years, the big headwind Snap experienced was when Apple changed its privacy policy on its devices, which made it more difficult for Snap to collect user data, which then made it more difficult for Snap to sell targeted advertising. That was a big headwind. And so it needed to work through some solutions to make its advertising inventory more attractive to marketers. And this is that solution. And this is that solution paying off with revenue jumping over 20%. I was reasonably confident that Snap would be able to achieve this, given that Meta achieved it a few quarters ago. Pinterest did a solid job of doing this a couple of quarters ago. And so I was reasonably confident that Snap would catch on and figure out a way to adjust to those changes in privacy policy. So they're working around it really well now. It took some time, but now they're working around it. Revenue jumped over 20% as their advertising inventory became more attractive to marketers. Another area that was not great news for Snap was the growth in average daily active users. The number of daily active users increase was really strong year over year, growing to 422 million, up from 383 million in the same quarter the prior year. So it added 17 plus 22, 39 million users year over year, and 8 million users quarter over quarter from Q4 to Q1. But within those numbers, if you take a closer look, is where the disappointing number was, and that was a year over year decrease, 1% decrease, and this is rounding. That shows they still have 100 million active users from North America, and they had roughly 100 million in the same quarter the prior year. So zero growth from North America. This is the most valuable user for Snap and for every social media company. Users from North America have more purchasing power, and advertisers are paying more for the privilege to advertise to users from North America. And so growth in this segment is highly coveted, and Snap did not demonstrate any growth in this segment, and they haven't demonstrated any growth in this segment for several quarters now. In fact, they've went backwards from 101 million down to 100 million. So that was disappointing in an otherwise really strong quarter for Snap. There was some key areas of headwind. Now, I highlighted that users from North America are more valuable to Snap and nearly every social media company. And here's the breakdown of the average revenue per user broken out by geography. So users in North America generated $7.44 in average revenue for Snap, compared to just $1.13 for users from the rest of the world outside of North America and Europe, where Europe they generated $2.04 per user. So more than 3 times the rate from Europe they generate from users in North America, and almost 7 times, or we should say 6 times as much from users in the rest of the world. That's why growing in users from North America is so vital for Snap, and I was disappointed not to see growth from that region. That was something I was looking for from Snap in this quarter. Otherwise, a really strong quarter from Snap. I like that they figured out how to generate and accelerate revenue growth. I was disappointed in the reversal of growth in operating cash flow and free cash flow, and also disappointed in the average revenue. Not the average revenue, but the lack of growth from users in North America. So that being said, the stock price was up significantly following the earnings results, but still, Snap is trading at a forward price to earnings of 30. It's still not expensive given its growth prospects, given its growth expectations. I still like Snap at the current valuation. And to reiterate my recommendation, I reiterated my Snap recommendation on April 16th, suggesting it was a top stock to buy, a top 10 growth stock, and a top 25 overall stock. After evaluating the earnings results, I'm keeping Snap up here. I'm reiterating that recommendation on April 25th and saying that it's still one of my top 10 growth stocks and one of my top 25 stocks to buy right now. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.